Good morning, ladies and gentlemen. Once again, my name is Armstrong Robinson. I lead the government affairs team here at AALU Gamma, and we're very excited to welcome you to the latest in our PPP webinar series. The watchword here has been from the beginning that things can and will change, and we will bring you the latest and greatest, best information possible each time there's an evolution. And Congress, as many of you probably know, just changed the PPP program, making some highly demanded reforms last week. And we'll get to that in just a minute. But I want to go over a few logistics and introduce my fellow colleagues and friends. Today, you'll be hearing from Josh Karen and from Alex Cisneros, who is one of the newest members of the government affairs team at AALU Gamma. He joined us since this COVID stay-at-home started. So he's one of those new employees trying to figure out the world from his living room. But he's done an absolutely fabulous job, and much of his research and leadership has been reflected in the work of prior webinars. So I'm really glad that we're able to bring you his expertise live in first person. We'll be together for about 45 minutes today. We're going to get to as many of your questions as we can on the tail end. As always, given that this is an open webinar, I want to remind everyone, if there's a member of the press on the line today, and you'd like for formal comments or any elaboration on these points, please reach out to our colleague Shana Armstrong. Her email is armstrong@aalu.org. And just as a reminder, as we do so often, we're not here to provide specific tax or legal advice. We're not permitted to do that. We're giving you policy context around what has happened in the government. And then, if you need very specific legal advice around your taxes or what you're doing, you need to contact your own resources and advisors for that. So let's get right into it, Alex. Why don't you tell us a little bit more about what Congress did last week and how that's affecting all our members and their clients?
Yeah, thank you, Army. Yeah, so last Friday, President Trump signed into law H.R. 7010, the PPP Flexibility Act, which enacts a number of changes to the PPP program, right? So let's start with the first one. I think that the one of the changes that was made here was that it extends the 8-week cover period to 24 weeks or December 31st, whichever is first. And the law is retroactive in this case, meaning that any loans that were made prior to the enactment of this law they can choose to maintain the 8-week cover period, and they have their documents ready, they have everything ready to go for loan forgiveness. They don't have to worry about this 24 week cover period. The other change that was made was that it extends to December 31st from June 30th, the period in which businesses can restore staffing or salary levels that were reduced for loan forgiveness. So as you might recall from the guidance that we got on loan forgiveness and then the loan forgiveness application form, you have up to June 30th to rehire employees to have the same full-time equivalent employees, and also increase or have the same level of wages before you got your PPP loan to be exempted from the loan forgiveness reduction due to the reduction of full-time employees or wages. The other change was just it was a little bit controversial as the bill moved through Congress, was that it made a change to the 25% rule to a 60%, 40% rule. So this is the rule that was implemented prior to this HR 7010 becoming law, which said that at least 75% of expenditures for payroll costs had to be made in order to be eligible for loan forgiveness. So this lowers the threshold to 60%. And yesterday, Treasury issued a press release saying that that even if you don't meet the threshold of 60% for payroll costs, you're still eligible as a borrower. You're still eligible to qualify for partial loan forgiveness. And I think Treasury came out with this press release in advance of the guidance that we're going to get, just to include this new bill, was because there was some pressure by Senator Rubio and some other senators to say that the law was written in it had a cliff. Basically, it was written in a way that it had a cliff where people who wouldn't meet the 60% expenditures for payroll costs would not get loan forgiveness. So this actually press release quells those questions, and so it provides borrowers with that flexibility. The next one is that it allows borrowers to defer principal and interest payments on PPP loans until the SBA compensates lenders for loan forgiveness. So before this bill came law, the CARES Act and subsequent guidance said that you could defer payments up to 6 months. And so this provision allows, it might allow you to defer payments for longer than 6 months, right? Just to note that SBA will pay for the accrued interest on that, as well as the principal of the loan. The next point, it's that allows borrowers of PPP loans and loan forgiveness to receive payroll FICA tax deferment throughout 2020. So before this law, again, the borrower could get tax deferment on payroll taxes until it received message from SBA that they were going to get loan forgiveness. So after that period of time, the borrower was not eligible for payroll tax deferment. So this allows the enactment of HR 7010 allows a borrower to get tax deferment on payroll taxes throughout 2020, even after getting that loan forgiveness. So, and I just want to add to this because a lot of our members have asked about the deductibility issue with the IRS issuing guidance saying that the expenditures that were eligible for loan forgiveness are not deductible. The bill didn't include that, and didn't include basically getting rid of that IRS guidance. There's been a lot of support from bipartisan support to address this issue so that the loan forgiveness, the expenditures on loan forgiveness could be deductible. So we're tracking that legislation in the Senate and the House and efforts in the House to address that issue. So please stay tuned for any updates on that. The other point is that it establishes a minimum loan maturity period to 5 years, up from 2 years. So this is important because if you have some of your PPP loans that were not forgiven, you have a longer period of time to repay that principal and interest. The other point to make is that it maintains a forgiveness amount for businesses that document their inability to rehire or replace workers. So this is a new provision because it basically allows the borrower to say that they weren't able to rehire or hire qualified employees similar to the ones that they let go. So they can document that and say, we were not able to rehire qualified employees during the loan forgiveness period, then they will be exempted from the reduction in loan forgiveness. The other point also is that if a business was not able to get similar, have similar operations to the levels of February 15, 2020 due to COVID, then they can document saying that they were not able to rehire workers because COVID, and they can get exempted from that loan forgiveness as well. So as I noted in my introduction, SBA and Treasury will issue new guidance to enact this new law. So please stay tuned to our webinars. The other thing that I'll note in the press release yesterday, came out yesterday, which is there's some back and forth about whether Congress was going to extend the PPP loan application deadline to December 31st. So the press release said yesterday that the deadline to apply for PPP loans is June 30th. You can still apply for loan forgiveness up to December 31st, but it's just those PPP loan applications that have a deadline. So I just wanted to note that. So yeah, with that, I turn it back to Army.
Yeah, Alex,
Thanks so
if
much.
you don't mind, I think that was all really well said. A couple really salient points, I think, for the folks listening in. One, I've had a lot of members ask me this question around what the changes that have been made with this piece of legislation do not increase the amount of money you are potentially able to have forgiven. They're not increasing that aspect. They're just giving you more flexibility to spend the funds that you receive from the PPP. So you might be able to hit that max loan forgiveness, but the amount of money, the amount of eligible expenses that you are allowed to be forgiven ultimately does not increase because of this. It just gives you more flexibility in terms of when you can pay back those loans. The other, or the forgiveness on them. The other sort of piece that I wanted to put on here that I think is a really important one for our members is that change from 8 weeks to 24 weeks, and then the 60-40 rule potentially adds a lot of value for a lot of financial security professionals. If you're in that instance in which you are somebody whom is a sole proprietor, took the max loan amount, you've got the cash compensation cap on your your income replacement. And this just gives you more flexibility on the non-payroll side to be able to spread, to include more of those expenses. So those two things together, we think will be very beneficial to the financial security professional on membership. So I just wanted to highlight those two things.
Thanks, Josh. Thanks, Alex. I think we're now going to go through, ultimately this bill makes it more generous. An already very generous program, much more generous and much more flexible, that should benefit all of you and your clients. It is probable that everybody on the phone today has already received a loan, but while funds had run out in the earlier editions, my understanding currently is that there are still funds available for additional loans to be made, and applications are still being accepted, as Alex said, until June 30th for loans. Forgiveness, obviously, you have the longer period. I think Josh is going to walk us through what we know now about the forgiveness application. And as Alex said, this new law is going to mean that Treasury and the SBA have to issue more of their interim final rules we've all become so fond of, and updated FAQs that Alex reads as soon as they come out, no matter what time it is, to get you the latest and greatest information. So Josh, why don't you take it away and give us an overview of the loan forgiveness application, what we know now and what's going to change, and then we'll go to Q&A on the back end.
Thanks, Army. Yeah, we'll go ahead and start walking through this. As they both just said, two of the pieces that we know for sure are going to change. The SBA did put that out in their press releases. One, they're going to have to modify the borrower form. So the actual form that you're going to fill out, that's going to change. So that's a big piece that we know for sure is going to change, and also some of the calculations are going to change. And so we know those pieces are coming. So what we're going to go through and cover here is, as much as we know now, with obviously the caveat being we'll learn more as those all come out. So in the broad strokes overview, right, we've got 4 pieces that are included in your loan application or your loan forgiveness calculation. One of those is going to be a loan forgiveness form. There's a Schedule A sheet in there. There's also Schedule A worksheets 1 and 2, and then a demographic information sheet that is voluntary for you to fill out. So those are the 4 component pieces. The first tranche of loans, the first day you could have received a loan was April 3rd, which means if you're staying in that 8-week window, the first day your forgiveness period could have ended was May 29th. I think I saw a stat the other day that said roughly 7% of the loans that had been given out were just coming up to forgiveness there, and only about 20% through about the second week of where we find ourselves today in June, we're coming through. So a lot of people are still working through that initial 8-week period. The loan forgiveness application, when you do submit it, it's going to go submitted to your lender. You're going to either do that in hard copy or electronically. And then all borrowers must also submit their PPP loan forgiveness calculation and the PPP Schedule A with supporting documentation. So of those 4 pieces, you only have to turn in 2. That's going to be those 2 sheets. The lender then, once they've gotten your forgiveness information, they have then a 60-day period for them to render a decision on forgiveness to the SBA. And then we've got the links on the sheet or on the screen there where you can go to get the form, and also where that first round of guidance was. So those are those 2 links. So we can go ahead and move to the next slide. So what did we learn from the form and the guidance? There was a lot in here. In the broad strokes of this, is that they were trying to inject a little bit more flexibility into how these funds could be used and spent. And so there was a lot of flexibility built into what we learned from this guidance. So let's kind of walk through, and we'll explain these more in depth and detail as we go through and hit the relevant parts of the presentation. One of the first changes that we saw in there was an option to calculate payroll costs using an alternative payroll covered period. What they had heard from a lot of folks was that the 8-week window was too restrictive. It didn't line up with their payroll period. How could they go ahead and adjust that? They've given us some flexibility there with that alternative payroll covered period. They've also got built in a little bit of flexibility for us when it comes to making those payroll and non-payroll expenses by defining what they mean by paid versus incurred. So there's a little bit of flexibility built on those 2 fronts. There's also specific guidance on how to account for a full-time employee. What does that mean? They've also given us a number of the calculations that we're going to have to go through. 2 of the big tenets of the PPP program, as everybody knows, was that you had to keep on your employees. That's what they wanted you to do, is make sure you kept on all your employees and kept paying them roughly the same as what you were paying them before. And so how are you going to calculate possible reductions in those 2 areas? They gave us the calculations on that. We've now got the 60-40 rule versus the 75-25 rule that we had before. And so they've given us the specific calculations to be able to get through that. They've also given us some instructions on bonuses and hazard pay for non-owner compensation. And they've also put that limit, and I referred to it as a second ago, a cash compensation limit for self-employed, independent contractors, statutory W-2 folks, sole proprietors at $15,538. It's $100,000 divided into weekly costs, and then the 8-week cost period there. So that's some of the developments that we got from the form and the guidance. So let's go through those in a little bit more depth and detail here. So this top sheet that you're looking at is what I'm calling the top sheet. It's the PPP loan forgiveness calculation form. So this sheet is where you're going to enter all in your relevant loan information. So you're going to put in, your business ID numbers, your address, all those identifying information. You're also going to put in your PPP loan amount, the date it was dispersed. That was the day when the money hit your bank account. If it was given to you in tranches, then the first date of the first payment is your loan distribution date. You're going to put in there your employees at the time of your loan application, your employees at the time of forgiveness application, and we'll talk about that in a second here. Also, if you took an advance from the EIDL program, that advance amount will be subtracted from your ultimate PPP loan forgiveness. So, if your ultimate loan forgiveness rounds out to $20,000 here, but you also got a $10,000 EIDL advance, that would be subtracted, and you would only be eligible for the $10,000 in forgiveness from the PPP program. And then once you've gone through and entered in this information, go ahead, Army, something you want to add in there? So once you've gone...
No, go ahead.
Once you've gone through and added all this information, you're going to pick your payroll schedule, how you pay your folks. You're going to pick your covered period or pick your alternative covered payroll period. And then once you've done all your calculations, there's 3 lines on here, 8, 9, and 10. Whichever are the lowest amounts of those 3 lines is what your ultimate forgiveness number is going to be. And sorry, I've still got on here, my fault here. Payroll costs should actually only say 60% the requirement. That's now changed. And then you'll make your certifications on here. So a couple of just salient points, or one main salient point here. All this information is going to be the same information that's found in your tax filings and returns. Also, too, this is the same information that you're going to have used when you applied for your forgiveness loan, or excuse me, your PPP loan. And so those information has to be matched up. So that's what is contained here in this top sheet. So let's go to the next sheet and we can start going through some of that. So when you're doing your PPP loan forgiveness calculation, this is one of the most important aspects of the process here. There's a couple of parts that are, or a couple component pieces that you'll need to find out to be able to answer these questions. One is you're going to do your payroll costs. That's going to be determined by your Schedule A worksheets. We'll go through those in a second, but that's how you're going to figure out how much in payroll you had over the 8-week covered period. Your non-payroll costs, which we've covered in previous webinars, but those are going to be things like your mortgage interest, your rent, your covered utilities, which include electric, gas, telephone. We've been kind of using the general standard of if it was tax deductible in this sense, there's a good chance that it's probably covered. And so, those are your covered utilities on there. One of the changes that was made on here is they allowed for personal mortgage interest to be included in your loan forgiveness. So if you had a home office, if that was your structure, that was allowed to be used in your loan forgiveness here. So that was one of the other designations that came through on this form here. And so those are some of the things that will be included in your PPP loan forgiveness as you're going through. So let's spend a little bit of time now on the covered period versus the alternative covered period. So as it was originally set out, you had 8 weeks to be able to get expenses forgiven in the PPP program. And that started on the date that you originally received your loan. So if you got your loan on May 1st, those next 8 weeks were your covered period. And so your expenses that you either paid or incurred within that 8-week period were going to be the ones that were going to be forgiven. A lot of businesses said, hey, that doesn't really match up with my payroll structure. It's going to, add in a lot of confusion on the front end, on the back end, potentially, of what expenses might be covered. And so can I get a little bit more flexibility in there? What the program has done is added this alternative payroll covered period. And so that means that borrowers can elect to move that 8-week covered period to a different cycle to match up more accurately with their payroll structure. And so what that means is if you got your loan on May 1st, but your first payroll didn't hit until May 7th, you can move your covered period to start May 7th so that it more accurately aligns with your payroll covered period. And any expenses that you pay out on your payroll and your non-payroll that fall outside of that covered period, as long as it was incurred within the covered period, can also be forgiven as well. One big distinction on here. Yeah, go ahead.
Can we, so let's just stop here because I know we're going to get questions about it. So that's all based on an 8-week period, right? And so now they say you can have a 24-week period. And Alex, you said earlier, it's up to the borrower. They can choose, right? We know that much.
Yep, that's correct.
So for each of you, as you're working on your own loans or you're working with your clients, this is going to be increased flexibility. It doesn't constrict what you're able to do. It increases what you're able to do. As I think Alex and Josh both said, you're eligible to apply for your forgiveness as soon as your 8 weeks have concluded, but you don't have to apply for your forgiveness until you want to, up until the end of this year. You have till the end of calendar year 2020. And because of this PPP Flexibility Act, it's made clear that they will cover your principal and interest up until the date of your ultimate forgiveness is paid. And so I think we're going to get more guidance from Treasury and the SBA on exactly how the 24 weeks works as opposed to the 8 weeks. We don't have it yet, and we'll do more webinars when we do. But so you have some time. There's not a rush to have to get this done, right?
Yeah, very accurate. And the part about the 24 weeks is really important right here as we're going through this on sort of the 8-week structure that it was originally designed. This is some of the parts that they're going to make changes on and give us more guidance so we can more accurately know what's going to happen, how they're going to administer that 24-week period. if you do choose to use this alternative covered period, there's a couple big distinctions here. One is that they're only for payroll costs; they're not for non-payroll costs. And so your covered period, 8 weeks, 24 weeks in the new world, their structure around that, you have to stay within that window. You can't use an alternative covered payroll for non-payroll costs. And so that's a big distinction in there. Let's also walk through the definitions that they gave us around what types of loans, or excuse me, what types of expenses can be forgivable, because they have two sort of definition here, which is expenses that were either paid in the forgivable window or incurred in the forgivable window can be forgiven. And so what that means is if you physically made the payment on the covered expense, on the payroll expense, whatever it might be, in the window, that can be eligible for loan forgiveness. So if you paid that money out during the window, that counts as forgiveness, or counts for your forgiveness. They're also saying that if you incurred a cost in that covered period, that can also be forgiven, although you can't use those things twice. And so let's kind of walk through a little bit of how that would play out in reality. If you, let's just say you have your rent, you got your loan on May 1st, your first rent payment in that period was May 15th. That's going to cover the 4 weeks prior, so all the way back to April 15th. Because you are paying that expense, all 4 weeks of that expenses are eligible to be paid or eligible for forgiveness because you're paying it out in the covered window. Now, continue with that example. If May 15th, then your next rent payment is June 15th, and the next rent payment after that is July 15th. The June 15th, again, you paid that in your covered window, and so that's all eligible for forgiveness. But also, too, the payment on July 15th, because it covers the last 2 weeks of June, you can cover, it is eligible for expense that last 2 week period, prorated, that included those 2 weeks within June. And so that gives a little bit more flexibility in terms of including expenses when it comes to the definitions of paid versus incurred within the covered period. So that's a really big piece of information that we got from this last form. There's also, in this PPP loan forgiveness calculation, you're going to have to work through a couple of the worksheets, which we'll cover in a second here, amongst did you reduce any salary, did you reduce any of your employee numbers? And that's going to be determined by those two worksheets. And so there's some information for us to unpack in there. You're also on this form going to fill out your non-cash compensation. So it's for your employees. It's not for you as an owner, independent contractor, statutory W-2. But if you've got employees that you have a common law relationship with, those health insurance costs, retirement plan costs, state and local taxes, you'll fill those in on this form. And then also there's a line for owner compensation. That's for the folks who are self-employed, independent contractors, sole proprietors, or statute W-2s. So a lot on the PPP loan forgiveness calculation that's covered in here. So let's go ahead and move to the next slide. So this is the PPP Schedule A. This is what we're going to use to determine our payroll expenses for loan forgiveness and for any full-time employees or salary reductions. You've got two worksheets in here. The first worksheet is going to be worksheet table 1. This is going to be for employees that are making less than $100,000. And as you're going through this worksheet, you're going to fill in the information both for salary and for full-time reduction. There's a calculation in there that you'll follow. It's how you're going to figure out whether or not you reduce wages for any of your employees. And there's also a 25% reduction level in there that is permitted. So if you only reduce your employees who are making less than $100,000 by that 25%, that's fine. Anything more than 25% will be counted against you if you don't meet any of the other safe harbors when you go to apply for your loan forgiveness. The worksheet table 2, that's going to be for employees who are making more than $100,000, but importantly, that's only going to be counted for full-time employee reduction. And so the reasoning behind that, if you were paying somebody $180,000, you reduce their annualized over the course of the year, you reduce their salary down to $100,000 when COVID hit. There's no penalty for doing that. They're still above the $100,000 mark. And so they will only be counted if you actually let go of some of those people rather than just reduce their salaries in that instance. The full-time equivalent is designated at 40 hours a week. That's one of the details we got from the guidance and from the form. And so that's what will define a full-time employee, is whether or not they make 40 hours a week. When you're going through and doing your calculations on this, you can define your employees in two different ways. One, you can have a simplified reporting done, which says any employee that works 40 hours a week is a 1. Any employee that does not work 40 hours a week is a 0.5. And so that's a really simplified version. If you don't want to do the math and it's pretty straightforward, then that's how you would determine, or an option for you to determine who's a full-time employee or not. The other one's a little bit more detailed. If you've got hourly records, if somebody went from working 40 hours a week down to 30 hours a week, that would be a 0.75 as compared to a 1 or the 0.5 because of that reduction. There's no double dip in reduction. That was one of the benefits of the way they structured the form. As you can imagine, right, if you're doing these, you start with the full-time employee reduction. You start with the amount of bodies. Once you've done that calculation, that input goes in. And then your second form, which is the salary reduction, is only with the employees that you're left with. They didn't want to penalize you twice if you had to let some folks go, and then that affected your overall salary number. And so that's the way the form is structured to make sure you weren't doubly penalized in both sets there. An important part of these two worksheets to highlight is this does not include any owner comp, any self-employed comp, any independent contractors. This is solely for employees. And so none of your information is going to go into either one of those tables. That's all going to be on that line 9, compensation for owners. So that's some of the big highlights on this sheet in your Schedule A. Let's go ahead and move to the next slide here. These are the two worksheets, just so you can see them. And as I described, that Schedule A worksheet for anybody making less than $100,000, that has the full-time employee quotient, and it's also got the salary reduction quotient in there as well. For anybody making above $100,000, it's just got the full-time employee reduction on there. So that's the big designations on the sheets here. Let's move to the next slide, and we can go ahead and walk through some of the safe harbors that are included in here. So a couple of the safe harbors that were in here, you've got a full-time employee safe harbor for reinstatement. This is also one of the changes that Alex talked about early when he was talking about the new legislation. Any employees that you had to let go, if you reinstate them by December 31st of this year, you obviously would have to wait to do your forgiveness application until that point. Then any of these folks won't be penalized against you when it comes to your loan forgiveness amount. Same thing with the salary safe harbor. If you had to reduce anybody's salary or hours more than the 25% there, if you reinstate those by December 31st, by the end of the year, you've officially met that safe harbor, and you won't be penalized when you go to do your loan forgiveness. Also, too, there's the refusal to work safe harbor. This is one of the things we heard a lot in a lot of preceding webinars. What happens if I had to fire somebody for cause? What happens if I tried to rehire somebody, but they didn't want to come back for whatever reason? What happens if somebody voluntarily wanted to reduce their hours? There's now a safe harbor for those instances. You have to document that you did make the good faith offer to rehire that employee, they then rejected that. And then once you have done that, and make sure you have all your documentation, there's a safe harbor for those folks so that they do not count against you when you go to do your loan forgiveness. So let's go to the next slide on here. So there's a lot of required documentation that come with all this. We've got that listed out on the screen here so that you can see, in addition to the loan forgiveness calculation and then the PPP Schedule A that you'll turn in. These are some of the other documents that you would need to provide in order to document the amount of employees, how much you paid them, and all your other non-payroll expenses on here. So you're going to have these there on there. Let's go to the next slide. These are some of the documents that you're going to want to keep that are pretty important. So you're going to want to keep these documents so that you have them. The SBA at any point, I believe it's 5 years, Alex, correct me if I'm wrong, can come up to you and ask you for these forms. So even though you didn't have to submit them originally, if they do ask for them later on in that period, you will have to produce them. 6 years, not 5 years. And so, you'll have the ability, you have to hang on to these forms so you can show them everything. So that's on here. So I believe the next slide should get us to Q&A.
Awesome. Thanks, Josh. Thanks, Alex. Let's knock out some quick ones. We had a question. I want to go back to your presentation, Alex. It says, Leonard wants to know, can you now defer Social Security taxes during the loan, including the forgiveness period? Let's just go over that real clearly.
Yes. So throughout 2020, before the enactment of HR 7010, you could only defer the payments of your FICA tax until that you receive a message that you got loan forgiveness. Now, with the enactment of this law, you can enact throughout 2020. That's my understanding.
Yeah, it's from the original enactment of the CARES Act. So everybody who took a PPP loan can also defer the employer portion of FICA taxes from March 27th through the end of the calendar year to be paid back in 50% installments at the end of 2021 and the end of 2022. So it's an additional liquidity step for you there. There's a question here, Josh. Maybe this one will go to you. My client is a hairdresser, and by the guidelines, she's required to wear a mask while with clients and receive PPP money. She heard there's a clawback that the government could take money away if she violates the rules. Is this true? So I think I'll bring Josh in, but I think the required to wear a mask probably has nothing to do with the PPP. I think. I mean, there's some missing pieces here. But like, if you do commit fraud, if this client claimed employees that he or she did not have, then she has some liability. But presuming that her loan was less than $2 million, then she could take advantage of that safe harbor. And she just needs to document what she did with the funds, right, Josh?
Yeah, that all sounds right. And I think there's probably more information, a broader fact pattern could help us. One thing that was part of this last round of revisions is that there is another potential safe harbor, but they haven't fleshed it out all the way, that if you are a business and you couldn't bring back workers because there were safe and healthy restrictions on your ability to do so, that wouldn't count against your loan forgiveness. I'm not sure that this would tie in for this particular example. Again, with a broader fact pattern, I could get there. But they haven't fleshed that out in any detail yet for us, so we don't really know what that's going to look like and how that'll go. Go ahead, Alex.
It goes back to HR 7010. Basically, what I said earlier is that if the business can't resume business, because of health reasons, or because there were some other restrictions by state and local officials, and they're unable to reinstate like the same amount of employees or wages, they will not be penalized for that because of those local rules.
Okay. If I'm a statutory employee and I also employ 2 people, so does that mean in the form, Josh, does that mean I put in 3 people, right? Because it's myself plus my 2 employees. Is that how you count it?
Assuming, let me make a couple of assumptions here. Assuming statutory W-2 employee,
Yep.
is that, or just regular W-2 employee?
The fact pattern from the questioner is a statutory W-2 employee who also employs 2 other people.
Yeah. So yeah, in that instance, if you were a statute W-2 employee, your compensation is the owner comp. That's where that's going to go. Your 2 employees that work for you, yes, they would be part of the worksheets that you would be going through.
So I put in a 2 or a 3?
2.
Great. Let me also say, we're coming up towards the end of the time for our webinar this morning, but Josh and Alex are doing another webinar just for the membership. You can sign up to be a member if you aren't one yet at our website at unifytheprofession.org. We've got a great promotional membership going on. And we do lots of these Q&A webinars with our experts to go just deep into the questions you've got. So that is another opportunity if we don't get to your question today. And of course, members are free to reach out to us and we'll try to get you as much in the way of answers as possible. This is one we get on nearly every webinar. If you are an owner, how do you prove owner compensation if you don't write checks to yourself?
Yeah, so there's actually, I've learned a little bit more about this. What the SBA, when it comes to somebody who's self-employed like this, doesn't have, necessarily these sort of structures. Your 2019 Schedule C that you use to determine your amount of monthly income that you use when you went through all those calculations, that's all you need. And so what they're effectively saying is, because that was your income that you are replacing through this PPP program, you don't necessarily have to document you paying yourself. Now, we suggest you go above and beyond that, just so you have as much documentation as possible. If you wrote yourself a check, if you moved something from a business or a personal account, that's another really good way to prove you paid yourself. But they are taking that on the face, that you would have made that last year were it not for the pandemic. And so, you are eligible for those forgiveness on those costs. So document to the best of your ability, but that in and of alone establishes that you would have made that money, and so you are eligible for that forgiveness.
Thanks. Claire, we're asking here for a clarification on the number of employees. If you fire an employee due to cause, you don't need to replace that person. Is that right?
Correct. Yeah. So when you're going through your sheet, if you fire that person for cause, you don't need to use them on your worksheet that you're going through.
And I think I know the answer to this one, but the follow-up is, are there specific causes?
They hadn't seen it. So it could be performance, it could be lots of different things, but I think if you fire it for cause.
For reasonable,
I think you just have to go ahead, Alex.
Yes, for reasonable cost. So like, underperformance, I believe that you just have to document that, as Josh said, and you should be able to be eligible for the safe harbor.
Yeah, I mean, this is one of those areas where the program won't have been this detailed, and so they're going to rely on established parts of law. So if I work for Alex and he catches me stealing money, he can fire me. That's for cause. Performance is for cause. Not showing up for work. Those are kinds of things. He doesn't like the tie I'm wearing. That's not an acceptable, or the tie I'm not wearing, as the case may be today. What about deceased employees in the FTE calculations? What do we know about that today, gentlemen?
Nothing yet. That continues to be a question that gets answered. Here's the way that keeps getting asked. Here's the best way I can answer it. Clearly, that is not your fault. So as long as you document it, I would imagine that if you work with your lender on that, that's something that the SBA and the Treasurer will take into account. They haven't specifically said anywhere that I've read, and Alex, if you've seen it somewhere that I haven't, please jump in. I haven't seen them specifically address it, but just given the tenets of the program, you were meant to, use this money to keep employees on the payroll. If somebody passes away, that's not your fault, clearly. So, document that, talk to your lender about how to best approach it. But it's my feeling, at least, and from everything that I've read, that they wouldn't hold that against you.
Yeah, that's correct. And I would just add this, let's say you get denied for this because, you weren't able to document it at the moment, and you weren't able to get loan forgiveness. You can dispute that. And their SBA is going to come out with guidance on how they're going to treat that, the disputement process. And so we'll follow up with you on that. So they might have information on that as well.
All right, last question for our morning session. And as I said again, please stay tuned to the unifytheprofession.org website. We will update you whenever we get additional guidance from the SBA and Treasury. And of course, we will have more You Ask, We Answer webinars, the first of which on this subject for members is this afternoon at 1 o'clock. I believe there's still a couple spots left. If you didn't get your question in now, you can join Alex and Josh at that point. So this is more of a big picture question, but the question reads, does the new act make it possible, more realistic, for someone to have the full amount forgiven? My understanding of the original rule is that it would be rare for someone to have the full amount forgiven, but the increase to 24 weeks from 8 weeks seems like it's possible for it all to be forgiven. And I would say probably the 60-40 rule is probably also a contributor to that. But in closing, why don't you give us a few thoughts about that piece, Alex, and then Josh?
Yeah. So yeah, I mean, on paper, you could probably get forgiven for all the amount of the PPP loan that you got. But one of the unanswered questions is, how are they going to treat the cap that they put on for every employee and for owner compensation of $15,385? Are they gonna increase that because of the amount of period, the 24-week period that is going to be now covered? So those are some of the things that SBA has to address, and I think that's why it's important you tune into the next webinars that we have addressing this.
Yeah, I would echo that. I mean, I think this does potentially, the combination of 60/40 and 24 weeks makes it more likely that more businesses will be able to get the 100%. Just the quick example I can offer, most basic financial security professional, $100,000 cap, their max loan was $20,800 and change. With the owner compensation cap set where it is, $1,538, it left you roughly with a rump of $5,400 between your max loan and what the owner comp was that they had set out, which, like I said, leaves you about $5,400. If instead of having 8 weeks to be able to use eligible non-payroll costs to make up that difference, and instead of having the 75/25, if you've got 24 weeks in 60/40, it's much more likely that you'll find eligible expenses, not find, but you'll incur eligible expenses over 24 weeks of $5,400, therefore adding up to that max loan number. So it does, on the face of it, as I read it, seem to make it more likely that you'll be able to hit that $100,000 or 100% cap.
Thank you, Josh. Thank you, Alex. Thank you all for joining us. Please do continue to check in at the unifytheprofession.org website. We've got all kinds of good updates around the PPP and many more facts. Stay tuned and reach out with your questions, and encourage your friends to join us at AALU Gamma. Thank you all and have a wonderful day.